Hello guys, welcome to the train part. Just as we were discussing on Saturday, we needed to pay attention to this trend line to confirm a breakdown. And the breakdown happened at 10 AM on Sunday UTC. Right after that, we tested the trend line once again, and then we made it to an RSI of 45. In this video, I want to discuss what needs to happen for Bitcoin to still be able to continue going higher. We're going to put some emphasis in here on the confluence of liquidation levels with the CME gap from the previous weekend and the newly formed CME gap at the top end. If you like this type of content, make sure that you are subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And over the weekend, we made it almost to 300 likes and 2,000 views on the video on Saturday. Thanks so much for that, guys. I wonder if we can get today, that is Monday, to 100 likes once again. Consistently getting over 100 likes is really helping the channel to continue growing, so thanks so much for that. Let's have a look at the daily time frame. As you can see, the price is bouncing at 60.5, which is the level of resistance that we decided to take over a week ago when we drew this particular path in yellow. We say that we were going to find this level as a pivot, and we were going to find somewhere in this area a potential high based on the hypothesis that we should be finding a local high mid-September and start building a pivot low on the second half of September. Well, today is 16th of September and the price is bouncing off from this top. I'm not claiming necessarily the pivot low must be a lower low, but I have decided in this chart to make it very extreme. So I remind myself and you guys that there is still a potential to wipe the liquidity located at this area, which is the largest liquidity at the moment, coming from liquidation pools. If we were to make a higher low in here, that will make things a lot easier, particularly if the rate cuts coming this week end up making investors happy together with the macroeconomy. That is happening on Wednesday. There's an expectation of 0.25, but actually many people are saying that it's a 50-50 between 25 and 50 points. So far, I'm happy with this rejection at 60.5 because it's confirming that mid-September we find some pivot low, and once again, I'm not claiming that we have to go to 46 necessarily. It's just there as a reminder in case it happens, and to be extremely clear, I'm not putting a stop loss there. Instead, I'm planning to buy more if that happens. And actually, I'm very happy because on Saturday in our video, I claimed that the most important thing that you needed to pay attention is for a breakdown below this trend line on the 4-hour. And that is precisely what gave us the hint that we were going to come back down to 58K. I also talk about this level in here to be a mild pullback because at this point all we are doing is we are retesting the breakout above the CPR level for the month of September. So if we were to hold the CPR levels, which span from 58.5 to 57.5, we could be later be heading to take the next liquidity above the price. Let's remember that throughout this recent period, the investors on leverage have been nothing but shorting the price. Every time we put a high, they short once again. They're trying to time the top, and after this double top on the 5-minute chart, you can see that they have entered and placed their stop loss and liquidation areas at 61.1. Looking at the 4-hour on trading different, we can see it much more dramatically from 61 to 62, a big chunk of liquidity resulting due to this double top. The price went straight into the small liquidity at 58, and yes, there's still a lot here of mild liquidity if the price decided to go lower, but in order to take a decent chunk from the lower end, it has to go to 52.6, and on the high end, it must go to 67 and to 70K. But let's focus on that 52, 53. what do we have in that area? And for that, we're gonna go to the CME gaps. And this was one of the ideas we were discussing on Saturday. We talked about the price ideally during the weekend coming lower, so we build some sort of insurance towards the highs. Why is that? Because if over the weekend the price moves while CME is closed, when the market opens once again, it leaves there a big chunk of liquidity. And as of today, Monday, we have two gaps that we need to fill. One that is immediately above the price, spanning all the way to 60K, and another gap on the lower end from 53.9 to 54.5. And if you ask my preference, not necessarily my forecast, I will tell you that it will be amazing if the price continues to creep down to take the liquidity on the lower end without taking the high end as we approach the rate cuts, because that will leave the insurance on the top, helping us to then recover quickly to the 60K area and potentially continue taking these high areas of liquidity right after having taken the confluence that we currently have between 52 to 53 and the fair value gap from the previous weekend. What do we need to do now to continue bullish? Very simple. Today we're going to use the CPR model to assess a confirmation of a bullish continuation. In terms of price action, it's extremely simple. If we ignore for a moment CPR, just in terms of price action, moving above 65K keeps this structure of highs and lows a bullish one, because we will be taking this high with a new higher high. And when it comes to CPR monthly, what we need to do, according to the model, is very simple. We need, during this month, to at least touch once the first level of resistance, currently located at 66.8. Is there any incentive currently for the price to get to 67K? Let's have a look. It's evident when we look at the liquidity after this double top at 60.5 that if we were to make it to 67, there is a large bag of liquidity. Now let's zoom out just to compare relative to the other chunks of liquidity that we have below, and you can see that the 67 is larger than 51, 52 when we are excluding 70s and excluding below 50s. But if we include everything in the chart, then we are upside down. The liquidity at 46 to 47 is much larger than 67, and even to the one that is at the top end at 74K. We can even see that the 74K liquidation pools have now been reduced, meaning that many shorts that were open, resulting in stop losses and liquidations of accounts around this area, have now taken profit. Let's have a quick look at the weekly time frame. Of course, we have to do that. Yesterday was Sunday, and we have a new candle consolidated, which is this one in here. You can see that it's a green engulfing candle relative to the prior one. We can also see that we have printed a fourth consecutive bullish crossover on the stochastic RSI, and the closing candle on Sunday resulted in an RSI below the resistance, slightly below it, and the currently ongoing candle seems to be slightly above it. Do not get tricked and take for granted that now it must break out. We're still not out of the woods when it comes to the RSI weekly. This could result next week pointing down, just the same as it can result pointing up. The stochastic RSI crossover is also not confirmed. With the current prices, it's showing a crossover. But during this week, if there was a dump, this will open up and remain without any cross. So it's very important to wait and see what happens after the rate cuts, how the markets react, and unfortunately to wait until next Sunday for a full confirmation. The DXY, the dollar index, is looking quite bullish. Our forecast for September was to go and hit the resistance at $102. We made it to 101.9, and now we are doing the second leg much earlier than expected. You can see the drawing was too exaggerated showing December, but actually we are already in here at $100 for the fourth time in this area, testing the support, which is bearish for the dollar but bullish potentially for risk on assets. The RSI has already confirmed the breakdown, and we just need now to wait for the dollar to break below 100 to confirm Hopefully, a move that can take the dollar from $100 to maybe $90. And that was all that was needed for the strongest leg of the previous bull market. You can see here in the low end of the chart. The gold is continuing with this strong trend to the upside, still holding the trend line, and you can see that in the previous bull market it acted as a leading indicator. During the flat area here up until September of 2020, gold was in a massive bull run that topped precisely in July of 2020. Once gold broke down and started going sideways in this area was the best time for the crypto bull market. That breakdown happened in November of 2020 once we had this price action in here, and that was signaling that the bull run was ready to go into the parabolic stage. Quick update on the spread charts. You can see that the VIX chart shows Bitcoin breaking out once again. We are having consecutive breakouts in this chart. The previous one turned into a fake out, but this is showing that this could potentially start building a channel towards this end. It's a painful wait. There can be another fake out, but I'm most certain that the direction of this is towards this area at this point in time, which is bullish. The Fed closed right at resistance on the RSI. You can see the candle closed right there. We don't have breakout on the Fed, neither on NDX, and on DXY we don't have breakout either, unfortunately. We will continue to monitor this. Make sure you're following me on Twitter to stay up to date. We monitor these charts because this is going to tell us clearly when there is a massive next leg in the bull market fully confirmed. When it comes to the megaphone pattern, you can see that we saw a rejection at 60.5, which is the lower end EMA. What do we need to do here to continue on this trend to the top? We should do something similar to these two candles in here, which is to hold the line ideally above 57.5, which could be the last line in the sand. And remember, these are weekly candles, so we are definitely allowed to go and fish liquidity on the lower end, as long as at the end of that week we put close above the levels I just mentioned. And the wells continue to accumulate. Now we are at 0.83, which is phenomenal for accumulation of big whales. There is obvious conviction in here. We only enter these areas where there is strong accumulation. You can see that price can remain sideways and even dump slightly in this area, but only this type of accumulation can result on moves of 200% all of a sudden, causing all the people to scratch their heads and not understand why did this happen. We are currently heading towards the green, crossing fingers that we do not get another distribution, meaning that this indicator starts pointing above 1, above the MA, because those things will indicate that conviction it's suddenly not as strong as before. Long-term holders are currently in the sideways area from around 9 of September, not selling, but just going sideways. And I interpret this as their caution towards the rate cut event this week, which I agree is going to tell us a lot. September candle has been flipping between green and red during the past few days. We spent a few days in the green. You can see now that it's a very skinny candle, still holding a level of support that we drew in 2023. Incredible to see that this line is still a valid one, but we have done now the job of bouncing off this trend line. What we need to do now in October is to print a big green candle in here, leaving all investors with a very clear message that we are not coming back in here and we are due for another one of these green candles above the range, entering into price discovery. Of course, breaking this trend line, or even worse, breaking below this support that belongs from the previous market, taking us to the low 40s or even 30s, will definitely build a case for potentially a failed rally, in which case we are going to be focusing only on a dead cat bounce, not necessarily on all-time highs anymore. And let's have a look at the open interest. As you can see, we have exited the lower third of open interest that we have had in the past 6 months. Typically, exiting through this range ends up taking us to the top of the range. Like you can see in here, when we had this breakout in here, we went to the top of the range. When we had this breakout in here, we went to the top of the range. The only exception was in here where we found this resistance and we came back down. So the question is, with this breakout in here and this move that we are doing to retest the first lower third, could they still make it to the top? Potentially, yes. That is what we did in this area, where we retested 17 million and eventually we made it to the top. Unfortunately, these movements in here do not give us any guarantees on the direction or on whether we are going to be able to make it there. It's just giving us some probabilities. So we have 1, 2, 3 times that we broke out above the first lower third that turned out to take us to the top of the range, versus 1 time that we didn't. So we could say we have 75% chances to get to the top end, but unfortunately the most recent event was a rejection at 19 billion. So I will say that this, because it's more recent, has more relevance than the 3 that we have before that. And that makes me think that the probability is not necessarily 75%, but maybe a little bit lower if we want to be fair to that. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and you get additional $500 for free to trade on any of the coins listed in this page. Click on the top link in this video description to activate the promotion and to see the instructions. I also left in the description a referral link to open a new account on Bybit and unlock up to 30,000 in rewards. If you have your Bybit account using my referral link, you do not have to pay any of the memberships on TTP as long as you're trading with your Bybit account. That will give you access to any of these perks, including massive library of indicators that I have built throughout the years, including many backtesters, signals, and many of the indicators as well that you have seen in my videos. Join my Discord server, have a look at the strategy forum. I'll see you there. Take care. Bye bye.